Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. And we keep charging higher and higher. As you can see, the German DAX sold off a little bit, as did the FTSE. I'll put the FTSE up so you folks can take a look at it here. And then I wanted to give you just a little bird's eye view of what I'm looking at, whether that means much or not. The natural gas, folks, is under big trouble here. It looks like we're going to get below this. I didn't check the prices lately, but we're really close below that 175 level. So if you're going to buy down there, 176, 177, somewhere in that area, you got to put a stop, because these markets can go a lot lower. They used to be trading down there at 165 at one time. So you can become a natural gas distributor for the cost of about $500. So that's pretty much what's going on with these markets. Now I see Jerome Powell did his speaking today. We had a nice little run in bonds. It stopped right at the 78% level. It doesn't look like there's a runaway market in that as of yet. But to me, the most important thing that's happened here in the last 24 hours is what happened on Sunday night. I'll get this up here so that we can discuss it just a little bit. And here's where you have to defy human nature and do the work yourself. You'll notice that the low that we made down there at 33.03 was an exact 382 retracement, and we came screaming off that. We went from 33.03 all the way up to 33.30, and from that level, we'll just bring this up to date from one of our friends over in the UK that was kind enough to send this on to me. You'll take a look at this. Hold on here. Get this up here. Okay, yeah, see that 175 bill is really, really important down there. We were buying 177 yesterday. I put the stop at 173. I don't want to miss more than $400 in that stuff. Let's take a look at this. This is the over the last since February 6th, last 5 trading days. You can see the patterns that have happened here in the S&P. The one that I really like, folks, if you look at that 135 pattern right under where it says SPX 500 15-minute chart, that's a really nice pattern because you have a lower tops, okay? You've got really nice symmetry. You've got perfect ratios. You can see them lined up right there. And that leads to a drop of, 30 handles, 40 handles. Now you see the bottom that was made down there at the 382 level at 33.03. We rallied up 30 handles. We came down and we stopped exactly at the 61% retracement. That was also a Gartley pattern. Just use your imagination. You can see the ABCD there. And then so far we've expanded up to the 1.618 of the D leg that came in at 33.65. So whether that's going to keep going or not, it probably will. But that's what that looks like on a 5-day pattern. I don't know what's going to happen next, but the real beauty of this is that nobody else does either. That's the real key. Now, for the good news, tomorrow, none other than Stan the Man Harley from the Harley Stock Market Letter will be our guest. And on Friday, we are going to have Tim Bost of Financial Cycles Weekly out of Sarasota, Florida. So we got some nice guests coming in here, and we're going to be keeping an eye on what they have to say because they've been pretty good in this really volatile market. Now, I did get a really neat chart from one of our friends across the pond, and I wanted to share it with you. This is a long-term weekly chart. We've posted one like this into the newsletter, but you'll see here that these big ABCD patterns and everything have completed up here, but that doesn't mean they can't go higher as we've seen before. So that'll be also very interesting, to look at. So those are the main ones that we're looking at. The market is up quite substantially this morning. Whether it continues or not, you're not going to have to wait and see, but it can certainly do that without any trouble at all. Now, let's take a quick look at this natural gas one more time here, because I think that we need to, where is it? Are you joking me? Oh my goodness, I've lost my... Oh, this is not good. Shut the front door. Well, I don't know what happened to it. It disappeared. Oh, my gosh, this is not a very good thing. Huh. Son of a gun, not very good at all. All right, let's move on here. I wanted to cover something else here from the, and this is that U.S. dollar that we're talking about. We got to keep talking about this, folks, because this is really important. This is money moving around all over the world, but you can see the U.S. dollar continues to get up above those old highs there. It looks like we're heading towards 99. The euro bounced a little bit after breaking below the 109 level today. The pound is acting just a tiny bit better. It's held that support at 129 one more time. We got as low as 128.80, but we'll have to wait and see, what's going to happen with it before we move on to see what the next one is going to be. That's for sure. Okay, now let's take a look here at the let's just get this natural gas up here so we can take a look at it, because I think it's going to be interesting to see if it's going to hold this level or not. Boy, it's down here. It's down here in deep trouble. That's all I can say. Let me refresh the chart here, and then we'll be ready to go. And I'll get the daily chart up here so we can take a quick look at it. Yeah, we're down here. We are knocking at death's door, as they say in the trade, because if you get it much below 175, that is going to break the, let's just get this up here so you folks can take a look at it. It's going to break that 1.618 expansion number that, goes back to October. There's double ratios there, folks, so it's going to be really interesting to see if it can hold it. Right now we're trading it at 176.60, and whether that's going to be much to make much of a problem or not, we'll have to wait and see if that's going to happen. But it's right at that level, so that 175 level is really, really important. Anything below 173, that's why we're looking at 177 with a stop at 173. Anything below that would tell us that we're most probably getting ready, to go a whole lot lower. That's really what we're looking at. Shane has just pointed out that the oil, let's just get this up here to take a look at it, because I think you'd like to see some of his work here. It's actually quite nice. We'll get it up here, and hopefully I'll get it. There we go. I want to bring this to your attention. This is Shane's solar cycle that he's looking at here in the oil. And, we've got a chance for a bottom in here. He's looking at 210 as a solar cycle. So you'll notice these have been pretty good for picking tops and bottoms. So pay attention to that oil. It did get down and make new lows, but it snapped right back, folks. And it snapped back very quickly. It gave a really good $1 rally very quickly, and usually that doesn't happen in a bear market. So watch for a potential bottom here on in February the 10th here, of a possible bottom in the oil. And that's a pretty nice cycle. So I think it's something that we really need to to keep on our radar, if nothing else. Okay, let's move on. And I wanted to talk just a little bit about the cattle. Let's just do one thing. Do have to do one thing at a time here. Just a second here, boys and girls. The cattle is this is really, folks. I've lost all my futures charts. Shut the front door.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, Shane has sent us a really nice chart on the natural gas. Looks like it's going to have a solar cycle coming in on the 14th. That's Valentine's Day. So let's pay close attention to that. The level that we're looking at has already been hit. That's at that 177, and with a stop below 173, say 172.90 is why I wouldn't do it in even numbers. Now we got a caller on the line. Mr. Z, are you there?
Good morning, Larry.
Good morning, my friend. How are you? You want to take a look at the British pound?
Yeah, I've got a very specific question for you.
Sure.
And I, of course, I know you analyze these charts daily and nightly, so you're intimately familiar with each and every squiggle. My very specific question stems from the fact that I am attempting to find a pullback bottom for intermediate-term position swing trade longs, a pullback from that December 13th peak up near 135. And, of course, that was the day in which Boris Johnson won re-election. Anyway, we had a low yesterday. It was either Sunday night or Monday morning down at 128.70. We're fractionally above that. My very specific question, forgetting fibs, forgetting everything else, is there a pattern that you recognize that could support or suggest a pullback bottom forming right there?
Well, of course, because if you look at the weekly chart, let's just put this up here. I think the weekly would probably be the best thing to see. You'll be watching it real easy here. We hit it exactly, as a matter of fact. We were talking about this in the newsletter. That was at that just right below the 129, 128.80. We hit it 2 days in a row. We've already rallied 80 pips off that second bottom today. So that's telling you that there's probably something very, very important happening at that spot. That's what it would look to me.
Very good. If I can further just ask you, Larry, if in fact a rally starts to unfold here the next couple of days, maybe next 2 weeks, Are there any benchmarks, milestones, signposts that you'll be looking for that would suggest to you or deny or negate the possibility, or the idea that a rally from this level, 129-ish, is just getting underway that takes us up and exceeds 135 to higher price?
Yes, John, if we get quickly above 132, that's 2.5 handles from where we are right now, you could be looking at a move that could take it all the way up to 141 to 140 without any trouble. But it has to have the really good thrust. So far, it started out pretty good, but it really needs to continue. Right now, we're only 80 pips off the bottom after having that big down day yesterday. The fact that it didn't keep going down, it made a slightly lower low by a tick or two and then reversed. That's a very positive thing. And I posted the intraday. You see that it made a pullback of nearly exactly 61%. So that's what we're paying attention to. So we'll see if that's going to be the case or not. But we'll be watching it very closely for sure.
I appreciate that. Just one last thing I might ask, and it stems just from my listening to what you just have said. Full disclosure, I bought the British pound again yesterday, a little lower price, I think 129, 10, 15, something like that. Mm-hmm. And, of course, I had been probing for a bottom in a couple of days preceding without success, keeping the net losses tiny. Mm-hmm. My question is, if this buy down at 120, call it 129.15, if that is successful, and if a rally ensues, in the next days and or weeks over that 132 you just remarked, from a trader's perspective, would that be the setup where you would feel comfortable adding to longs, on a slight dip if we get over 132 first?
Yes, I think it would, because you're going to trap a lot of people at that point, because, they look like they have, and they still have everything in control, the shorts do right now. But if we get back above 132, there's big trouble. That just like yesterday when the S&P opened at the 382 retracement on every single index, the Dow Jones, the NASDAQ, and the S&P 500 all opened at the 382 retracement of the low from last week, right at those exact numbers. I mean, that's a giant screaming signal, and that means that everybody that sold it at 132 would now have a loss, and that shouldn't be happening if it's correct. You know what I'm saying?
Right. Very good. Thanks for that elaboration. Thanks so much. I'll be signing off. Wanted to just mention this. An idea just popped into my head. You have remarked repeatedly your respect and admiration for Tom Hugard in his skill in pressing winners and yes, loading the boat, if you will, when he finds he's on the right side of a trade. I have never heard him, or maybe I'm sleeping, but I haven't heard him remark of trading the currencies much. And given he's a Brit, he obviously knows the British currency intimately. If he's on in the next couple of weeks, or if you talk to him, perhaps that's a question of pressing the long side, and if so, where the British pound versus the dollar might be a question worthwhile putting to him and seeing what he says.
Well, I'm in contact with him every day, and I happen to know that he is long the British pound from 129, and he's looking for higher prices. He has not added as of yet, but he did do that. He's certainly he's been short Tesla for a long time. He sold it up right near the highs, around 900, and he's still short that. And then he's, I think that's about all he has right now. He's looking, he's waiting this morning to see what the price action looks like. But, he is long the British pound. I'm 100% sure of that. I found that out a half an hour ago. So you're absolutely correct on that one.
I love it. This, your network is invaluable, Larry. Thanks so much.
Yeah, so is yours, John. We appreciate everything you do for us here at TFNN. No question about it.
I know.
Folks, I wanted to share with you. Yeah, you bet. Thanks a lot for calling in, John. Really appreciate it. Here's what when I try to look at these markets, folks, is I try to look at four basic things. That's the main thing that I'm trying to do, is I try to take. That's interesting about the Hugard in Denmark. He was the first authorized silversmith. That's very interesting. Huh. Thanks, Mr. Bill. I'll tell Tom that. That was really cool. Okay, this is you start with the opening price. You try to stay in the direction of the opening price. Watch standard deviations. In other words, how many levels are we away from the mean? Like right now, we're 3 standard deviations up in the S&P, the Dow Jones, and the Nasdaq. Nasdaq is actually above it, but those are the things that I look at. I watch the harmonic numbers. The numbers that we see all the time. 88 pips in a crude oil and 5.5 points in the S&P, and in market statistics, what days of the week it usually rallies. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have a grain report coming out today, I believe, and you'll notice here that we had that big ABCD pattern up there at the 592 level. We're now trading at 550, 40 cents below that level, and what we're looking at here is what the report is going to be bullish or bearish. Now, the two things that I'm watching here, just based on those market statistics that we just talked about. We go back and look to see what happened in the past. So if you go back to see what happened between the middle of October and the middle of November, you notice that the market had a break of 535 all the way down to 505. It broke 35 cents. Now, so far, we have come down more than that. We've come down 50 cents. From 45, we're down 40 cents, very, very close to that. And the $64 question is this report going to be bullish or bearish? And do you want to decide whether you want to go into that report either bullish or bearish? Well, first of all, if you look at this, you can certainly tell that the trend is up, correct? That's number one. Number two is we've had an equal correction that we've had from the previous low that we had back in October, November. And not only that, but it took almost the same number of time in days to do that. So the odds are that this is going to be a friendly report. And even if it's not, the wheat should rally. Now, I'm not going to go long into this report, but I'm just saying putting the statistics into that in that format, that gives you a little bit idea of what you're watching. So we'll see if that's going to be the case. Now, we've also had some information coming in from this thing about the viruses and stuff. And folks, it's been, well, everything that comes on the news, I mean, one channel is totally different than the other. So be very, very careful of what you listen to in the news, because unless you get it from a family member firsthand, I would have a hard time believing it. It's just really quite pathetic when you see the different things that are going on. Dennis, the corn has a good support at the at that 380 level, as near as I can tell. You know, the things will eventually loosen up here in China, but how long it's going to take, I don't know. You know, we're almost, you remember Shane told us a week ago that we would be at 50,000 cases, and we're at 44 and change, I think, this morning. And so it's moving along. And if that's the case, in 1 week, we're going to be at 75,000 cases, because they don't seem to be, you know, getting any different. So we'll have to do, you know, one thing at a time, but that's what we're watching as we look through here. I think you've got, those are March options, Dennis. I think you've got a good chance at those, because the market is oversold, and China is going to need a lot of food. So we're going to see whether they start buying or not. But there's a lot of things happening in the world that depends on a lot of this stuff. So we'll have to give us a pretty good idea of what we have going on. Now, the Bitcoin, we've already talked about that yesterday, that it did break out, backing off a little bit, but it's getting close to that 10,000 level again. So if we can give that up, if we get above 10,000 one more time in the Bitcoin, that'll be an interesting one. But really, folks, if you're watching these cryptocurrencies, and I pay slight attention to them, not very much at all, because I'm not involved with the trading of them or anything. But if you'll take a look here, you'll notice that you'll see that these other coins are really the ones that are going. See, Bitcoin is only up 38%, Ethereum is up 70%, and Ripple is up 47%. So, you know, Bitcoin is lagging, you know, very, very badly. So that's the one where things are really jumping around. So keep that in mind as we're watching some of these things unfold, that we'll be able to see what's going to happen here. My goodness, we just dropped 20 handles in the holy cow, in the, what you call it, the at NASDAQ. That's very interesting. So we'll see what goes on with these other things here. Okay, let's move on here to the natural gas. We're holding up now. We just actually made a new high on the day here at 178. Maybe that bottom is going to hold, folks. It's going to be a big treat. Whether it does or not, we'll have to wait and see to see if it's going to happen or not. Let's take a quick look here. Jumping around a little bit too much here, because I want to talk just a little bit about the bonds. They're at a very critical level here. We'll do the hourly chart as we see here. Get this up here 1 second. And there we go. There we go. You'll see here that we made a bottom yesterday at 162.06. That was a 382 retracement off of the low of the 6th of February. That's actually a bullish sign, and now we started, you know, to move higher. If we can get this market up another handle from where we are right now, we're at 62.24. If we get it at 63.24, then this thing could have game, because that means you would be having a much much better chance to challenge those old highs that we had way back in February at 64. Remember, though, on the longer term picture, this looks not too bad. Let's just show you what this looks like on this weekly chart, because this is not a let me get this up here 1 second here. This is not a bearish pattern, so to speak. Let's get this up here, and you'll be able to see it. There we go. And that's what you're looking at right there as you're watching it unfold here. So that's what it watched. I mean, I'm watching that very closely because I don't know anything about negative interest rates or what Powell says or any of the other stuff that goes on. All I can tell you is that when these things move, they move very, very quickly. So that's the main thing to pay close attention to. I've not ever been able to have anyone explain to me why negative interest rates make any sense at all. And I know they don't make any sense at all because they never have in history. And just because someone says that it is, it doesn't make it so. Remember what Bernard Baruch said, don't be concerned on the return on your money, be concerned on the return of your money. Always be concerned about the principle that you have going on. That's the real key to watching what we're looking at this morning. So pay close attention to that, boys and girls. Very, very important. Okay, let's move on. I wanted to cover one other thing from the that's, I think, relatively important, and I keep repeating it over and over again. Let's just get it up here. And this is this New York Stock Exchange Index. The fact that yesterday we did the same thing. It didn't do anything at all. It just backed off a little bit. We're back in. We're still way below the 78% retracement. So we've not made new highs in the Russell Index. We've not made new highs in the broadest of all the indices, which is the New York Stock Exchange Index. So that's another one that we want to watch. Another market that is on our radar for a potential break to the downside. We'll get this up, and that is the platinum here. We'll get this up right here. You'll see that we had a nice rally up to the 992. We broke down to the 960 level. We're trading at around 960, right around 960 and change this morning. So with gold bouncing off the 61% retracement last night at 1569, we rallied up another $9, and now 85. It's got a chance to really go, folks, because that would make it, we've lost broadsword to Danny Boy, broadsword to Danny Boy. Come in, Danny Boy. The eagle has landed. The chicken is in the pot. Something's wrong in Mibber City. Broadsword to Danny Boy, broadsword to Danny Boy. Come in, Danny Boy.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
All right, folks, we're back. Sorry for the inconvenience, but I tell you, my biggest frustrations in this business are all technical, and evidently the Skype went out for a second, and I'd lost sound, but evidently you folks could still hear me, but that's neither here nor there, so we'll see how these markets keep moving on. A couple of questions that someone's have asked, well, actually only one question from last night, and that is, which market do I follow the most closely? Folks, I have to say it has to be the gold market because I've always been interested in gold. It follows the number sequences as good as anything. They all do pretty much the same thing, but gold and crude oil are 2 of my ones that I really enjoy the best. They have great volatility. Stop protection is easy to do. The market's a true market. You know, you don't have a lot of Federal Reserve in there. You do have some, of course, I'm sure. But we have a question here. Is this coffee that we'd like to see, Bob? Is that the one you'd like to see, is coffee? I think it is. Let's just take a quick look at the coffee, and we'll get it up here for Bob to see what we have looking at it. Just give me 1 second here. We'll move this up here, and we'll get the old coffee. Coffee starts with a K. There it is, and we'll be up here in just a second. So it looks like it's holding in. It's looked like it's making a bottom in here. Shut the front door and raise the rent. That's a good sign here, Mitch. Yeah, it looks like we had some type of a bottom form down here, way down at the 90% correction level. Let's get this up so we can see it in the room so everybody can take a look at it. That's what we're watching here. We've had a pretty good rally, folks. We've rallied about a nickel, which is quite a bit. That's the best rally we've had since December. So whether that means anything, we're higher now. We're about unchanged on the day. So that's a little bit of a skeptical sign. The one thing there's a gap there that we left last week. You notice it gapped up. And then that happened at 99. It shouldn't get back to 99, Bob, if it's any good. It shouldn't touch that gap because if it's good, that's about all it should do is to do that. No more, no less. That's what I would keep a close eye on that thing because it certainly shouldn't get any below that without any trouble at all. That's for sure. So we'll watch it very, very closely as we walk through seeing these charts as they unfold today. The other one is the crude oil. We're trying to make a bottom here in crude. Let's just get this up here. We've given it a little bit of a chance here to see if it's going to do it or not. But right now it looks like it's going to have a little bit of a problem because we haven't had much of a rally. Let's just get this up here, and you'll see each of these rallies here have happened, but we've got a potential, and I'm saying here the word potential is a potential for a double bottom in here. And as Shane said, there's a solar cycle due here in natural gas. Whether it has anything to do with the crude oil or not, I don't know. But we did make a higher low today, which is a lower low today, which is a good sign. And that bottom from February 3rd is held so far. So that's what we're paying attention to as we look at these here this morning. So we're having a lot of volatility. My goodness, we had the S&P dropped a quick 7 points and it took it right back right away. This market's the shorts are absolutely scared to death, as they should be. That's for sure. Okay, let's move on here to the gold market. Now, the gold has held the 70 that very important level at 1569 last night. We're trading right now at 1575. We rallied up about $8 from there to 1577, and as long as we can get above that level, we're going to be if we can get above that 1585 level in the gold market, that's the one that is going to be the real key to be watching these things. From my opinion, it has a chance to really get bullish if we get above the 1585. I don't know if it's going to or not, but it certainly has a chance. And if we do, then we could have a running market in gold. Remember that weekly chart that we focused on in the newsletter for several times? It was one of the questions that somebody asked is, how did I know that the market was going to react 38% when I wrote it in the newsletter? First of all, John Jameson helped me write that. And when I was looking at that, he was saying that we're probably only going to get a 38% retracement. And when you looked at it, it looked very, very logical. And that's why we put it in there. And of course, it happened overnight, Sunday night, and the market, went from 33.03. We rallied 60 handles and still going. So that must mean something. That's why I posted it in there to show you that it was the Dow Jones, the NASDAQ, and the S&P 500 all hit 61% retracement. So that's important to keep your eyes on the gold here, because these markets are extremely volatile, and the shorts and the longs aren't scared of anything, but the shorts, the people in the short side of the market are certainly scared. There's no question about that. We've just in the last few minutes, in the last 15, 20 minutes, we've had a 10-point range in the S&P up and down. So that just shows you that there's a lot of people manipulating for positioning, in the market. Someone's asked a question about the silver. I'll bring it up and we'll take a quick look at it, because it doesn't look nearly as bullish as the gold, and but it does have a chance. But boy, I tell you, it's really got some problems. If you look at this just on a technical basis of where we are in silver, it really does look bad, folks. Take a look at this, folks. You'll see here that this downtrend that we have here, look, we haven't even taken out the highs of last week yet. I mean, give me a break. We've had virtually no correction. We're trading down a little bit today. My goodness, this is not a very bullish chart for silver. Now, if we can get silver to rally about 30 cents to give it above $18 an ounce, then you've got a chance. But this is not looking very good. It's just not, and platinum's the same way. It's just not. They're just not responding. So those are just a few of the ones that you want to keep a close eye on as we're watching some of these things. It's very, very interesting to see how this pattern is lagging so badly versus the gold market. If someone would like to explain that to me, I would like to hear it. But the fact that we couldn't even take out the highs of the last 4 days when gold was starting to rally makes you one pause why it's not acting like a precious metal. So that's the main thing. Remember, folks, tomorrow we're going to have Stan Harley of the Harley Stock Market Letter. That's Wednesday. And Friday we're going to have Tim Bost of Financial Cycles Weekly. Both of those gentlemen are ranked in the top 10 for the Trader's Digest, which is good, along with the leader of the pack, which is Kerry Szymanski, my good friend here in Tucson, Arizona, Harmonic Trader. And so we've got some really great guests coming. Kerry does not like to get up early in the morning, so that's why he doesn't get on the show. But one of these days, if I do an afternoon show, we'll have him on. He's a great guy, tremendous human being, and devil-may-care connoisseur. So he's a really, really nice fellow. All right, let's move on. Here we go. We got the break coming up here. And after the break, we'll come back, and I want to talk a little bit more about my relationship that I had with Mark Douglas because of some of the things that he was able to help me with that you might be able to realize that, we all go through the same problems. And that's the key to, these things here, that we've got to be able to watch these very, very closely. Well, we just almost made new highs in the S&P, very, very close, but we'll be there soon enough. Just pay close attention. We'll be new highs when we come back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I was going to mention Mark and I worked together for 3 years while he was writing the book, Trading in the Zone. Each day he would come in the office around 6:30. We'd spend the whole day together and usually had dinner at night. But it was just day after day, and his guests would come in as he was interviewing them for the book, and I got to meet many of these folks. And it was just really amazing to listen to the stories that they told about how they had gone from success to failure and failure to success, back and forth, but stuck with it over the years, and each one of them turned out to make a nice living for themselves and their families. But it was amazing, the stories. There was hardly any that didn't have some really bad ups and downs where they had learned a lot from the market. So I think that's a very, very important fact to remember as we look at these things here today. So keep that in mind. The other thing that I highly, highly recommend, folks, is to listen to Basil on Thursday night. That gentleman has a lot of great information. His historical perspective on some of the things is just really worth the price of admission. He's an expert person in using moving averages. He knows how to use them for risk control, and his Basil cycles that he uses is just really it's very, very unique, very similar to what Richard Wyckoff did. I don't know if Basil did that with the idea of Wyckoff behind it, but the charts look very similar, but they're easy to explain once you listen to what he has to do. So I would highly recommend Thursday night to listen in to Basil, because he's very, very good at what he does, and I think you'll enjoy it a great deal without any trouble at all. The main thing to folks is to live every day in an attitude of gratitude, and may God bless. And we'll see you folks on the flip side tomorrow. And remember, we're going to have Stan Harley tomorrow, and then on Friday we're going to have Tim Bost as our guest. Next week we will have Bill Meridian, and hopefully Cy Monley from Farm Bureau and Silvius Financial. So that's what we're going to be doing in the future. So remember to keep those cards and letters coming in, folks.